hunting. Stealth, thank you. Mark, I see you. I'm going to make you the presenter now. Got it. What a great time to be talking to you with what's happened here in the markets. In Monday, looked like we were going to have a correction. Friday, I went with the outside weak, buddy, and God, it just exploded to the upside. How are you, my trading warrior brother? Nice scene on the lake. You fishing? So waiting for your audio. Let me check your audio here.
If I had to guess, that's little northern New York or Rhode Island. If I had to guess, just guess.
I just unmuted you, Mark, so you're on the phone.
Can you guys hear me now?
Yeah, Mark. How are you, buddy?
Hi, very well. Thank you very much, Dale. It's great to be back, and thanks for those kind words, Blake, as well to you. So,
my pleasure. It's great to hear you as always. You're one of the interviews I always stick around for. So, enjoy.
Wonderful.
Thank you, sir.
Yeah. So, Mark, great time to be talking to you. It's always a good time to talk to you, Mark. I mean, you put the jigsaw puzzle together in the market as good as anyone out there on the street. So I'm not even going to lead it. Tell me what's on your radar and what you're paying attention to with what's happened this week.
Yeah, it's been an interesting move the last few months. I think a lot of people used the time from October to December to de-risk, and very few were prepared really for the extent of the rally that followed. And it's been a lot more robust, I think, than many expected in equities anyway. Dollar has shown a few signs of trying to roll over in the last couple months. That's sort of interesting. And, treasuries and stocks have been really moving in tandem of late, which is, a little bit different than what we've seen in the last year. And so,
could we see your screen, buddy? Right now we're looking at.
Sorry, I thought you guys were. Is this okay? Is that a little better?
There you go. Yeah.
Let me try to.
It's fine like that, Mark.
Yeah.
So, the bonds look great. And, I don't know how many times I've, kind of old school that anytime the bonds are about to put on a bull move, you think there might be some de-risking going on. And that just has not played out at all. No,
it hasn't. I mean, it's interesting that the majority of, treasuries globally have been a lot stronger. U.S. treasuries have held up. And, if anything, there continues to be a flight to want to buy, I think, yield and move into treasuries with the amount of, pressure being put on yields overseas. And so, there seems to be a decent appetite for treasuries. And, it really hasn't affected U.S. markets at all. I mean, the old days you used to see signs of when yields started to pull back, stocks followed, and that just hasn't happened in the last, few months. So it's interesting that, let me. Pardon me 1 second. Let me see. I'm on a different screen here. I had some issues with my launch pad, and so I had to. We're just making use of the regular screen today. So, my thinking is that yields still have a move to the downside in the next 2 or 3 weeks that we're likely going to test the levels from early January. So that's really how I see the world. Is that right now, technology has helped U.S. equities out quite a bit, but really a lot of the other sectors have not really followed suit. So we haven't seen the same move in financials. We haven't seen the same move in healthcare, and industrials obviously have been led down by stocks like Boeing. So, but largely it's been tech, but that really has not been all that problematic to equities, only because, tech has been so strong, and we've seen that, in many different parts of technology. It hasn't just been semiconductors or software. And so, interestingly enough, on an equal weighted basis, we see, I use gauges of relative ratios, and technology as a group is actually pushed back through to new all-time high territory above the highs that were made last June. So this is a relative chart of, tech versus the S&P. We started to show divergence in the market when tech peaked out last summer, and as of the latter part of the year, that really started to explode. And so this is still very much ongoing, in my view, the technology move.
Yeah, that's interesting, Mark, don't you think? Because a lot of people, after, FANG got taken apart during the decline, Most people thought it was over. You know, a lot of, for example, I don't think Amazon has made a new high yet. Google hasn't made a new high yet. So isn't it other things? Apple still way below the high. Isn't it other tech besides FANG that's really leading the parade?
Well, certainly the enterprise software space has been very, very strong. But you know, you've seen some effort of FANG trying to come back in recent days, and
Yeah.
I was due to talk about that on CNBC, and then that got swapped for the airline bid on Boeing, and so you know, I missed out. But I think this is a chart of the MY FANG index, and so it has 10 members. Tesla is included in this, but there is Amazon, Netflix, Google, Facebook, and Apple. Among some of the ones. And, you know, we see this peaked out right when technology did in June, but now it's starting to make a snapback. And while there are some daily DeMark signals, I mean, it's been a very strong move. And if anything, many would look at this as being a, you know, a little triangle in the last month that recently has given way to some decent strength. So, you know, I look at some of the charts of Amazon and Netflix, and, you know, they don't look all that bad in the short run. If anything, you know, we've seen decent bases, but as you're right, they haven't moved back to new high territory. But
you know, someone showed me a weekly chart of Google, and you know, potentially a right shoulder setting up in Google. Otherwise, new highs would be like a third drive. So
I mean, the near term has been constructive, but you're right. You know, when you take a longer term look, you know, that could be in the making. We'll see. It certainly seems premature now based on. You know, what I see. And so, you know, it's not a head and shoulders until it is. And that's the simple lesson for most people, is that many people get excited when they start to see a stock going sideways and they're seeing this right shoulder. But if you look at DeMark, the last couple of weeks have actually, you know, we had a chance to peak out a few weeks ago and that failed. And now we're actually extending another count. And this doesn't look complete to me. So I'm actually betting on a further move higher to potentially test these former highs. You know, so I'm not just yet in the camp that tech is gonna sell off and really join suit. So, you know, there are three things I think that are important for people to realize about this rally. And one is that, you know, when you take a look at the breadth of the move that we saw, you know, really it's been stronger than what we've seen in some time from December, January, you know, where advanced decline is now back to new all-time high territory. So, you know, I looked at the deterioration in momentum on a monthly basis, and that's certainly a concern. But when you take a look at, you know, the daily and the weekly and the ability to snap back, I mean, I think that certainly is a pretty positive factor, at least in the short run. And I myself have been thinking the market does peak out sometime this year. I'm just skeptical, you know, that you know, the decline just yet has run its course. I think, if anything, the movement in tech is strong. If you start to see some participation in financials and in healthcare and industrials, and that would help things to broaden out a little bit more.
New highs in S&P before the next correction, Mark?
Well, correction, you know, depending on how you define correction, I think, you know, between now and the end of March, I can still see the potential of more gains, even if you have a near term stalling out. It looks like the one thing I look at is like NASDAQ versus S&P, and that certainly has shown very little signs of turning down. And so when you see that in place, you know, that's one thing that, you know, on daily charts still looks to me to be quite strong. And that,
I know, I'm long SQQQ, so I've watched, you know, being on the wrong side of a NASDAQ bearish ETF, how there'd be days where the S&Ps were down 10 handles and NASDAQ would be down 10 points. So, I mean, the relative strength's been outstanding. Is that a sign of that being, you know, this rally being more speculative, that NASDAQ is leading the way?
No, I don't know. I don't necessarily know if you can. I mean, look, that's going to fuel the bears in their case to think that yes, that is right. But I think that in general,
how about Russell lagging? Does that mean anything to you?
If anything, what's interesting is I'll pull up a chart here, and you can see what's happened between the Russell and the S&P. I mean, we had a large period in 2014 and 15 where the Russell had lagged pretty substantially, but we've seen, we've seen some outperformance between January, February, and then that's been given back a little in the last couple months. So, I don't know. I think that, it is a concern when you start to see small caps show some real severe deterioration, and we obviously have seen a little bit of that in the last few weeks.
Okay.
The question is whether you can, this is sort of a key level for me where I think it's sort of do or die, where, you might want to try to, right now the trends are negative, but you're at a level of support where things could very well stabilize. So I'm trying to be, bullish and not get too caught up on being negative, just given the trend. And if anything, I want to see more signs of real bullishness before I say, okay, things have gotten way too complacent. People are very optimistic. I just don't see that. Talking with people, when you look at the bullish sentiment polls that have, contracted yet again last week, you see, American Association of Individual Investors is might down to like, a 10. So we don't seem to be at levels certainly that we were last year, where the bulls to bear spread was out near 30, 40. And investors' intelligence has widened out, but I tend to use a combination of these. And when you see both in alignment on the bullish or bearish side, then that's more of an opportunity to get defensive. If you see a lot of bulls right now, I don't see that. I see a lot of skepticism about what's going to happen with China, and people have missed a lot of this rally and are now wondering. They're waiting for a pullback to either get in, or if they're short now, then
they're
technology
trying to break even. They're trying to break even if they're short now.
It's been tough. So to answer your initial question, do I see the market getting back to new all-time highs? I mean, I do see the S&P having a shot at doing that. I don't know that the average stock can do that. So I thought, we did see sufficient deterioration into the move down in December, where, we saw, I think, greater than almost half the stocks were down over 20% off their 52-week highs. I mean, that's a pretty serious period of, deterioration, where that's going to be, I think, a problem over the next couple years. Now, a lot of the longer-term cycles would suggest the market should be peaking out this year, and that the next couple years are not going to be all that great. But for now, I don't see that as happening right away. I see the time between now and September as still being a time that you want to be long. And really between now and April, I still think the market moves up, and you might have some consolidation and then a final push higher into September. And you have 90-year cycles, you have 45-year cycles, you have a lot of things that are aligned with this year potentially being a pivotal year. However,
not till the fall.
Yeah, I think that, you look at the decennial year stats, you look at just the time following the mid-year term election into a pre-election year. There's a lot of bullish, seasonality and, those other timing-based factors that we all look at. I just don't know that they're in alignment just yet. So,
okay.
I look at a couple things. One is that momentum now is positive on a weekly and a daily basis after having gotten very, very overbought really last year. So, for me, until this rally really starts to show evidence of rolling over, I want to still participate on the upside. The one problematic thing I see technically is that you are faced with a tremendous amount of negative divergence now, momentum-wise, on a monthly basis. And that's not going to go away. And so that is something where it's very similar to what we saw in 2007 and also, near the peak in 2000. That took almost 2 years of negative divergence. But you see a monthly chart, when you start to see divergence when stocks are pushing up, but yet momentum is going lower and lower, I mean, that's a real problem on an intermediate term basis. And so that doesn't mean the next couple months, but that means the next 2 or 3 years. And so I think that has a potential of being lower. I don't know that this year is going to be a down year. I think, if anything, the strength that we've seen the first quarter in stocks likely means that, that this is going to be, that it's going to turn out to be positive, and that really any dips are going to be bought. I want to see some real signs of breadth starting to turn down sharply. The advanced decline pulling back very few groups participating, and then, you line up the longer-term momentum with the shorter-term breadth deterioration, and you say, okay, we're getting near a time when stocks can truly make a peak. And so I'm eyeing September through October, November. I think this year has a potential of being negative. The dollar, in my view, is slowly but surely starting to peak out. I can't really put a top in just yet. I think that
what do you need to declare a top?
Well, I would want to get down under January lows of I look at the BBDXY only because it only has about 30% against the euro, unlike the Dixie, which is 60 and change. So it looks to be choppy over the last 9-10 months, but I think the lows are. I do see one more chance for a new low in the euro, and pound sterling has been pretty strong. So when you take a look at that just real quick, so you see what I'm seeing. And for those that are not familiar with my madness, I do use a lot of DeMark in my work, and I think right now it's a little premature to think that this snapback in the euro that we saw to the upside in the last week is all that meaningful. I still think that the trend on weekly charts is down. I think you're early to get DeMark exhaustion on a weekly basis. So I would be looking to really sell into euro versus dollar up at 113 to 113.5. Thinking we have a move down to 111 and change over the next 3 to 5 weeks. And for me, that would be a larger time to say, okay, that's when you want to step in and buy the euro, and that's when the dollar starts to make a larger pullback. So, I think we're early. I think, the move in gold has been interesting, and crude, I think commodities.
You keep going to, that's what I was, first you did the dollar, now the gold. So,
gold for me has to get up over 1375 to really trigger a true buy, and we just haven't seen that yet. And so, if anything, let me see if I can shut some of these down. I don't know how to get out of it.
So, we rallied almost halfway back to yesterday's high and selling off pretty good. Is 1250, 1260 in the cards there with euro going to 111?
I think we can pull back in the short run. I see, the fact we can get from probably 1300 to down near, I see the recent deterioration in the last couple of weeks as being more problematic, and for gold in the short term, I think is a short term top in gold. And so I think you pull back to, 12, if you equal this out and get to 1250, that would be a great chance to take a look at buying into this. So, for me, I want to see both yields and dollar turning down, and that's a time to get long the metals. I think it's been a nice move in the last few months, but I think, I'm still looking at the area that is my sort of line in the sand between bull and bear for gold, and that's 1375. If you get up above 1375, you'll want to get very, very long gold. I think that means that we're going to start a large intermediate term advance. Which, if that happens with the metals, you probably want to own silver because that usually does better when the metals are starting to move in tandem. So
I look at the gold silver ratio chart once in a while, Mark, and recently that gold silver chart, gold's been outperforming. But if you look at a long term chart on gold silver, it looks like it could be putting in a right shoulder of a head and shoulders top here without it being able to go up to new highs. I think we're in the 80s or so for the high of the move.
Yeah, 1 second. Let me see if I can.
Yeah, there you go.
Yeah, so this is gold versus silver. So it still very much favors gold. It's still early, So to get a shoulder, for me.
Again, the shoulder. Yeah, it's got to take out that low.
Yeah, I don't like to get. Yes, I agree that if you're, so. If you take some of these the Ichimoku out of it, you can make it a little cleaner. Let me see if I can do that real quick.
So you feel the same way about the miners as you do about the bullion?
Yeah, we had a decent run up, and now we've recently shown a little bit more strength in the last probably week in the miners than you have really in gold, and so
and that's a change, isn't it? Over the last month or so.
Yeah, it's always important to. I mean, the miners are certainly a little bit more positive in the short run, so a lot's going to happen versus whether, if you can take out the highs from mid-February. It seems to have been a pretty constructive move back up into this base, and if anything, you look at a weekly chart of how this looks, and it's still pretty constructive, for now. So I think you have to still be long. I don't see much fault with, if the dollar really starts to move up violently for whatever reason and gold turns down sharply, that might affect this. But I think, for those that are long, you just have to use stops at recent weekly lows, which hits the trend. And, I'm not a day trader. I'm more of a position. So there's no reason not to be.
I'd love to see 19 again if it takes out that trend line. Gold,
yeah, well, I think that would be interesting. That would certainly, if that happened over the next few months, and I think seasonally gold sometimes, can be weak between May and July and August before it turns up sharply. And so that might be the time that, the dollar has a little bit of a counter trend jiggle before having a more lengthy decline, potentially. Okay. But, commodities have, I just look at like the equal weighted, like the CCI index for Thomson Reuters, and, you've been sort of choppy here as well. It hasn't been all that compelling that you want to be long commodities. It's more of a neutral, you really have to be selective in terms of what you own, I think.
So why don't we talk about...
I'm a little more optimistic on crude, I think. Go ahead.
I was just going to ask you about crude.
Go ahead. I think, I'm positive that we can start to turn up into the low 60s. I don't see much that would really prohibit that technically. And if anything, we've seen some decent resilience of late at a time when crude had a chance to really start to roll over into, late February, early March, and that's picked up. So, from a DeMark perspective, this is likely going to grind up higher into another, 5 to 7 trading days before you see any exhaustion. And on a weekly basis, I can make the case for a move to the 60s. So, I think it's all supply demand, and until you see evidence of demand falling off, the supply, the recent inventory pullback should be supportive for crude to be able to rally seasonally into, April, May, which it normally does anyhow, and then you usually see some evidence of a peak, between, in the summer or in the fall. So,
how about with what you're looking for as a possibility in the dollar? Any emerging markets that are capturing your attention as a weak dollar would be supportive for them? Just like EM,
if you want to run through some, I'm happy if you have some on the top of your mind. I haven't looked at a few in the last couple of weeks. Okay. I mean, we can run through them, but
that's okay. I was just curious with what you saw in the dollar. Bonds are constructive. The market's constructive. The dollar could be in a topping mode. Gold could break one more time for a buying opportunity. Seems like you want to be long the world.
It's crazy, and I don't have a lot that suggests that now's the time to sell. And I look at a combination of momentum, I look at a combination of sentiment, and I look at seasonality, and I look at DeMark, and none of those things have lined up to say that, we're at an inflection point yet. And so, we'll see if the S&P and the Nasdaq can rally over the next 3 to 5 weeks, then I'd have at least something from a counter trend perspective to say, okay, it's right to take some off the table. But I'm just trying to, I think right now this is one of the strongest times of the year, and there's just not enough to say that it's time to get out of the way. And I think if you miss these times, then sometimes it's difficult when the market turns choppy or turns down to really make it up.
Okay, well, Mark, another great review of the financial jigsaw puzzle. So I know that people could follow you on Twitter at Mark Newton CMT. You want to show your website and how people can
that'd
get
be
there?
Great. So let me see if I can.
Someone just asked, do you have a view on India?
Yeah, I can.
While you're looking for your website?
Sure. So let's see if I can. If you just want to look at the Sensex, I guess, or there's several different ways, obviously, to break India down. I'm not as enthusiastic on the short run, only because you're getting close to former peaks from last summer, and at least on a daily chart, you're starting to get a little stretched.
Yeah.
In the short run, but I don't see much of an issue overall when you look at these longer term trends. They're still pretty.
Held where it had to.
I mean, that's a decent move in the last 2 or 3 weeks. That means that, for those that were thinking this was going to peak out, the last couple of weeks sort of, really erased that thinking. So I think, let's look real quick if we can on a monthly, and then we'll. I like India on an intermediate term basis. So my concerns are more just that, for those that are not in that, the next couple of weeks, you're likely going to be able to buy this a little bit cheaper, but really on any dip, you want to be a buyer. You see these prior DeMark sells that were present back in 14 and, going back and really in 2007, 8, those are nowhere near right now. We're at least 3 to 5 months away from that.
Wow.
So I am a bull on that. So my website, I'll show that real quick. So that is at newtonadvisor.com. I do provide daily and weekly commentary on equities, treasuries, currencies, commodities. I tend to do a lot on Twitter and on social media. I have a stock twits page for those that are looking for long and short ideas that I offer now. I have a room that I'm doing with them, and so I'd encourage you to go there. Or I have, commentary that just talks about sector rotation and markets and what's ahead for the S&P. So, I've been doing this for the last 30 years, and I'd encourage anybody to follow me initially on Twitter at Mark Newton CMT, and I'll put out some information as to how you can get involved. Send me an email to info@newtonadvisor.com. I'm happy to send you copies of my work.
Thank you so much, my trading warrior brother, for being here today with us and, giving me some clarity. Thank you for edifying F.A.C.E, Mark.
Thanks, Dale. It's great to join you and good to hear. Glad everybody could tune in today. So thanks for having me and look forward to it in the future. Take care.
All right, buddy. Good hunting. Everyone, that's bye-bye. Mark. That's Mark Newton. Alina says thank you. Scott says everyone's very appreciative, Mark. So that's a wrap for us today. See everyone for TGIF. Don't just count your pips, count your blessings, and see everyone tomorrow. Enjoy. Adios.